Hello, this is Aaron with BB2 with the global economic outlook in the week ahead, which is going to be the week 32nd in 2025. As always, let's first check what happened previous week, and then we can go forward and check the week ahead. Previous week, it was very important on the geopolitical movements, tariffs, trade tariffs, and the trade negotiations or trade talks. At the same time, we had very important earnings reports while the central bank meeting in Japan and United States with the labor market data and PC and core PC price index in the United States, all they were got the attentions too much in the market and moved the markets. On the geopolitical tensions, the tensions between the US and United States and Russia is continuing still. And there is now the less chance for peace talk between the Russia and Ukraine. We have to wait and see what's going to happen there. On the trade talks, after coming to some positive point between the US and Japan, now we had some agreement between the United States and Europe and South Korea as well. This somehow lowered or decreased the uncertainty in geopolitics in the world economy, but still at the same time, we know that the 15% minimum tariffs on the goods. They just like somehow it's a high and maybe it can affect negatively on the global economy. Let's see what's going to happen there, but still we have uncertainty about the tariffs, ongoing tariffs and trade talks between the US and China. On the economic data front, we know the central bank in the United States, they hold their rates, while actually that was what we were expecting. But additionally, we had NFP numbers. Right after that, we had inflation numbers as well. The day after the central bank meeting, we had personal income and spending data and personal consumption. At the same time, the inflation of the personal PC price index. These data confirm that still the inflation is high and income is somehow supporting that this inflation because the income also is fine and they can support this higher demand in the market while the people they have money they can spend this money so the demand is high and the inflation at the 2.7% and 2.6% for the core headline PC price index. They say that there's still the Federal Reserve or the central bank generally in the United States and the government they're gonna have a little bit harder time to work on that and slower the inflation. On top of that, we had NFP numbers on Friday. In the NFP numbers, we got some disappointing numbers. U.S. labor market made just 73,000 job, while the previous month's numbers also revised down to only 14,000. This means that the labor market in the United States getting very negative signs. At the same time, we had unemployment rate at 4.2%. I have to wait and see what's going on happen. That made some political tensions, created some political tensions in the US as well. We will talk about that later in the week ahead. So, in the week ahead, after all this data, now people are talking, or the economists are talking about the chance of the rates cut, how many rates cuts we're going to have later in this year. Will that be two rate cuts or one rate cut or three rate cuts? I'm personally thinking about one or maximum two rate cuts, but there is the idea of three rate cuts as well. But so I don't think that there are going to be too many chances for three rate cuts because we have September, October, and December meetings. I don't think that in all three meetings we're going to have the one after another, one rate cut after another. Probably we're going to have one rate cut in October and possible rate cut in December or not. But if we don't have the rate cut in December, we're going to have that in January 2026. So this was my personal expectations, which means that supporting the data for the US dollar index. Okay, let's check the data in the week ahead, then we can go to the charts and see what's going on in the charts. We will review the week ahead on economic calendar by daily basis. On Monday, the most important data we're going to have is the factory orders in the United States and loan office servers. Mostly the factory orders. The factory orders is expected to fall by 5.2%. After increasing 8.2% previous month, we're going to have some risk here by 5.2%. These numbers can somehow slower the positive economic data, slow down the positive emotions or positive sentiment that we had from the positive economic data that previous week from the US economy. The factor orders, they're going to give us a mixed signal from the economic sentiment. European economic sentiment also for investor confidence or investor sentiments also supposed to raise slightly to around 5.5 or 6 per 6. That can say that while the economy is facing more challenges there, but the lowering interest rate by the central bank in Eurozone supporting somehow the idea of better economic growth in next month. Uh, sorry, on Tuesday, we will have the PMI numbers. In Europe, most of the PMI that we are expecting to have from the Europe, just like total from the Eurozone and European countries such as Spain or Germany, we expect to see the PMIs be slightly, I mean, not moving too much faster, higher, because mostly we're gonna have this service sector. Since it's a summer, we are not negative about the data, but we are not a positive as well. So probably we're gonna have them unchanged at the current number for example, for Eurozone. We are expecting to see the service PMI around 50, 51, between 50 and 51. Same thing will probably have in Spain and some other economies, and most economies in the Eurozone. So the data couldn't be too much positive or too much negative. They're going to be somehow the natural. But in China also, we're going to have the service PMI numbers for the Soxin and headline, and both of them you're expected to be between 50 and 51. So no surprise from China as well. But in the United States, we are expecting to see slightly increase in ISM numbers, especially the ISM service number, to slightly increase from 50.1 to 51.5, still showing that the US economy compared with the other economies in the world still moving forward slightly better than, we cannot say much better, but slightly better than other economies compared with them. On Wednesday, we're gonna have the retails. I have to mention about the producer price index for producer inflation as well. Producer inflation for the Eurozone is supposed to be published on Tuesday. We're expecting to see after 0.6% falling inflation on May. In June, we're gonna have 0.9% increase in producer inflation. These data, all of these data, they are telling us that still, while the inflation is still on towards 2% central banks target in the Eurozone, but still they're going to have a little bit more or harder job to hold the inflation around 2%. We have to be a little bit more careful about the upcoming inflation data from Eurozone. As for Wednesday, retail sales is also supposed to be published from the Eurozone, where we're expecting to see 0.4% increasing in sales after 0.7% fall in previous months. Factory orders in Germany also supposed to increase by 1% after 1.4% fall in the previous month. Generally, the data from the Eurozone, they can, especially with the PMI numbers and the inflation data and retail, they're going to tell us that somehow that we shouldn't be too much worried about the Eurozone for now. Eurozone economy, they're going to somehow stable. They're trying to be stable. They stabilize actually somehow their current condition. On Wednesday, we're going to have too many speeches from the Federal Reserve members. We know that before Fed meeting previous week that we had, before 10 days before Fed meeting, Fed members, they were not allowed to publish their idea publicly. So, I mean, they couldn't say, they couldn't have a speech or say their idea about the economy or possible decisions. Right after the meeting, they start to talk in the week ahead. Also, we're going to have too many speeches, especially from the Delhi, Cook, Michelle, and so many other, most of the Fed members. All of them, they're going to give us more data and idea or more picture about the better picture or brighter picture about the possible decisions that we're going to have in the next meeting. At the same time, we're going to have the more idea that what's happening in the Federal Reserve and why two members they vote for rate cut and what was this differences or I mean this conversation between them. They're going to talk about that, so we're going to have the more idea, brighter idea what happened in the meeting. On Thursday, the most important event of the Thursday is going to be the BOE meeting, where we expect to see the central bank in United Kingdom to cut the rates by 25 basis points. There is almost 100% chance of the rates cut. So, I mean, there is no doubt about that. Will that cut the rates or not? Yeah, they will cut the rates, but the most important is the voters. How many voters we're going to have to for rates cut and how many voters we're going to have to for holding the current rates. That will be very important on this stage. But at the same time, we are going to have the trade numbers. So this probably can support slightly UK economy because the rate cutting the rates. Because, we know that recently we had a very negative, disappointing data from UK economy. Probably this rate cut can support slightly a little bit European economies. And China also, we're going to have the trade data. After 7.2% increase annually exports, probably in the VK in July, after we had a 7.2% increase in June. In July, probably we're gonna have a slightly lower number, probably around 4.5% export increase. But at the same time, we should talk about the import as well. This is very important. Look, the import in Chinese import increased only 1% annually and monthly 2.3% previous month in June. For the China or the Chinese economy, more than even we're everyone you're talking about the trade tensions between the US and China, but the Chinese biggest foreign market is the United States, but the Chinese biggest market is the China by itself. So before we were talking, we wanted to talk and confirm to our export or Chinese export to United States, they have to convince our population to buy to spend the money. So that while they are not spending too much money, they are not positive about the upcoming economy. So they are spending less money, so the demand is lower. With the lower demand, the inflation also is low. This inflation that's also we're gonna have on Saturday later this week from the China as well. I mean, on the Saturday also the most important number that we're gonna have from the China, it's gonna be inflation number where we expect to see the inflation again to stay on the monthly scale to stay negative around 0.1% annually. Yeah, maybe 0.1 or 0.2% positive, but monthly change of the inflation in China will be around this number. So the biggest challenge for the Chinese economy for now at the current stage is the Chinese intral or domestic demand. The Chinese government are going to wait and see for it. We're gonna wait a little bit more and see what they are deciding about that. The thing is that there are too many talks that they are waiting to see the fate between the fate of the trade talk between the US and China. That is what's going on there. And based on this effect or the answer or the results of these trade talks, they're going to decide what's going to do for the next stimulus. So we have to wait and see more news, but generally we are not too much positive about the ongoing trade talks between the US and China, at least for the short term. Uh, so on Friday, we're gonna have the most important number that we're gonna have is the Canadian labor market data. Unemployment rate is supposed to increase to 6.9%, from the 6.9% to 7%. The labor market slightly weaker in Canada with the ongoing data that we have there. And generally, we can say that especially with the slower not as lower because I mean yeah with this lower ongoing trade talks progress we can say and the trade tensions that between the US and Canada this affecting the Canadian economy Canadian labor market production as well. The Canada is too much dependent on the US economy and the export to the US, so these trade tensions between the Canada and US maybe at the very first stages and the very first month the Canadian economies, the Canadian officials, they were talking so proudly about what they are going to do against the US as well. But on the longer term, they're going to be the loser if they don't get to the final point and the final trade talks or agreements with the US. So that will be very important. So as long as these tensions going on, we're gonna wait a little, we're gonna probably see more disappointing data from the Canadian economy. Let's go to the chart and see what's going on in the chart. As a result of the ongoing trade talks, as a result of ongoing data, economic data, generally all together in ongoing earnings reports. Actually, let's talk about the earnings mostly on S&P 500 and other stock indexes chart, but about the trade talks, about the economic data, the decision in the Federal Reserve, the US dollar got a little bit more support. because the expectations after the market expectations after the Federal Reserve meeting, it was more hawkish expectations. They think that they were waiting, okay, we're gonna wait and see to hold the rates, this higher rates for a little bit longer. So that supported that was the idea of supporting the dollar index to increase above 98 towards even to 100 marks. But at the same time, on Friday, we had the data, labor market data, where we saw that the labor market showing even though the unemployment rate at 4.2%, but we have they are showing very low hiring, less number of hiring, just 73,000, especially for the US economy. That's very disappointing number. In the previous months, this decreased down to 14,000. All these numbers, they mentioned that the US labor market also is under pressure. And with this pressure that we have on the labor market, the expectations of at least two rates cut increase again in the market, and that put the pressure on the dollar index. At the same time, the trade negotiations that we had, or trade talks that we had, they got very good points. Yeah, they have idea that they got some points, and now they agreed on positive stuffs there. But at the same time, these positive agreements or these positive talks, they ended with 15% tariffs. So all these negatively affected the dollar index. Now we have the dollar index slightly lower, but but overall or bigger picture is not as too much negative there. So the dollar index probably can continue around 98 marks. On the gold market, we hear US dollar and ongoing tensions in the market, especially the geopolitical tensions as well, supported the gold price, and gold again is in a positive movement. Generally, in the bigger picture, we talked before also, the gold in the bigger picture is still in positive, and we can still think about the higher data. While it was falling down, we talked about that the more falling, it means more buy opportunity. As for the energy market, these ongoing tensions, ongoing uncertainty is still putting pressure on the energy price, especially the oil price. But at the same time, we know that we are in the summertime, travel time, more demand for the energy and for the oil, and all these ideas, they're gonna support the oil price. So on top that we have some pressure on the oil price, but we can say that these data cannot change too much the market direction. As mentioned, we are in the summertime, and in the summer we have a more demand for the oil and the energy generally. So the oil price is still, we are expecting it between the 68 and 66 and 68, this area for the oil price to be continued. As for the stock markets, these earnings reports in the previous weeks supported the oil stock prices. We know that we had a very good reports with more than 80% win rates between the S&P 500 listed companies, very higher than 76% average that we had in the previous years. But that does 80% is very amazing number for the win rates. So all these data, they supported the stock prices, and they supported it, not just S&P 500, they supported the Nasdaq as well, and also the Dow Jones in the previous weeks to print the new highs. But after these data that we had, and after especially with the inflation numbers, and then with the trade talks, and then also with the geopolitical tensions, and also the profit taken by the investors, all of these numbers, all of these together, they supported the correction of the market. Now we're in the correction side, in the correction movement, not just for Nasdaq. This is for S&P 500, Nasdaq, and the Dow Jones. All of them, they are in the correction. But we have to mention the very important levels for the Dow Jones is 42,000, the pivot point. As long as we are holding this 42,000, we can talk about the possible buys opportunities in a correction. For Nasdaq, this level is 22,200. As long as we are trading above 22,000, it means that any fall could be the buy opportunities. And for S&P 500, this area is 6,000. So as long as we are trading above 6,000, and we don't, the price doesn't fall under this level, 5,900, 6,000 is this level. These are the pivot. As long as we are trading above this level, any correction could be the buy opportunities. As for the cryptocurrency market, we talk about that after the Federal Reserve and after inflation data, PC price index. After these data, we talk about the possible correction towards 114,700. We got this point. And then we talked under this level of 112 and then 109. Still, I'm thinking that in the midterm, at least in the short and midterm, we're going to have the downtrend, especially as long as the price is holding under 114,700. So this is generally what happened in the market previous week and what is our expectations for the week ahead. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.